so many different challenges ahead, whether it's on the economic front. How about valuations? Where do you see the biggest risks?
Good morning, Shery. Good morning, Heidi. I think that what we observe is that there's a lack of risk premium across most risk asset classes. And there's also in certain fixed income asset classes a lack of term premium as well. So we have to be very, very selective, and we have to be wary of allocating risk to parts of the market where there's an unfavorable risk reward. So what we think is important to highlight right now is there's a lot of rate cuts priced in the US Treasury market. So I think about 65 basis points of cuts in the second half of this year, around 150 basis points of rate cuts next year. And that, of course, is predicated on the assumption that we will probably enter a recession and inflation will fall quite precipitously over the coming 6 quarters or so. The question would be, what happens if that doesn't prevail? What happens if the US economy muddles through for at least another 6 months? What happens if inflation remains stubbornly high or only falls at a relatively modest pace? You would then argue actually that the front end of the rates curve does not look particularly attractive from a risk reward perspective, even though at Manulife we do believe that ultimately we do end up in recession and recessionary dynamics do present themselves probably from the end of this year onwards.
Can China provide the much needed upside when it comes to global economic growth, when it comes to investment sentiment as well? We just heard that during Golden Week, mainland Chinese people were rushing to Hong Kong to open accounts in order to start investing.
Well, one thing that we do observe about China is that the credit impulse is definitely picking up. But the ultimate cyclical recovery is starting to fade in terms of its power. There's a lot of latent spending potential, both by businesses and households. But one area which has benefited from that, particularly up until now, has been outbound tourism and overseas spending. And that's why you see some of the luxury brands listed in Europe, the consumer discretionary names, perform so well. They've really started to capture that revenge spending, if you like. When it comes to more domestic spending, it's been a bit of a slower grind higher. And the other point to highlight is because of the disinflationary and the secular overhangs to the economy in China, more stimulus is needed. But there you see limited fiscal room for maneuver, particularly by the local government. So it's a bit of a challenging macro backdrop. And on top of that as well, we've got to watch quite carefully what the regulatory landscape looks like, because it's not the case that the regulatory risks are now fully behind us. It's just that they're rolling through different parts of the economy. So from an investor's perspective, we've got to watch the cost of capital, whether it's moving in the right direction. And ultimately, overseas allocators don't like negative surprises. They like continuity and certainty and visibility when it comes to policy making.